Okay, let's take a look at some of the homework that you have coming up for the second homework assignment for Chapter 2. And I'm going to take these out of order here, just I think they'll make a little bit more sense this way. So the first one, exercise 2-14B. California company borrows $200,000 from the issuance of a note payable on August 1st of year 1. The company had the note had a 7% annual interest rate and a 1-year term to maturity. Now, one thing they don't tell you here is that this note is the type of note where you pay it in its entirety when it comes due. So when it comes due, we'll pay the $120,000 plus on July 31st of year 2, plus all of the interest at that point. So the first question, what amount of interest expense will California recognize for the year ended December 31st, year 1? So standing on December 31st, we have to make an accrual, we have to make an adjusting entry to recognize the fact that we've incurred an interest expense and we have a liability for interest in addition to the 120,000. Now, it's not for the interest for the whole note, it's just for August, September, October, November, December for 5 months. So the equation that we'll use for that is just like I showed in the lecture notes. It's the principal of the note, 120,000, times the interest rate, so 0.07 for 7%, times 5/12, so that's $3,500. So at the end of the first year, I'll increase my interest payable and I'll decrease retained earnings to recognize the interest expense. I want to go down and skip down to what amount of interest expense will California recognize in year 2. So we'll go down to F. So we go down to F here, and in that case, if 5 of the 12 months took place in year 1, well, the other 7 months must take place in year 2. So in year 2, the expense will be 120,000 times 0.07 times 7/12. So the way that works in my calculator here, you don't even have to write anything down. 120,000 times 0.07 times 7 divided by 12 equals $4,900. So I could check my math here and say, what is the interest for the entire note? Well, it's 120,000 times 0.07 times 12 over 12 for a whole year. So I can double check my accrual by saying, what is 3,500 plus 4,900? Well, it equals the 8,400 that I know that I owe for the entire note. So I can double check myself that way. So, and the other answers, I won't go through each of those, but the answers can all be derived from what we just talked about. So the next thing I want to look at is 2-9B, which has you entering transactions in a grid. And I want to walk through each of these with you. So the first one, the publisher gives us the answer here in the working papers, and they also give us totals at the bottom that we can use to check ourselves. So this first transaction, we perform 96,000 of cash services for clients on account. Accounts receivable goes up, retained earnings goes up, recognized revenue, no cash associated with it. Next, we perform 65,000 of services for cash. So cash goes up, retained earnings goes up, recognized revenue again. In this case, there is cash flow, and it's an operating activity, positive 65,000. Next, we incur 45,000 of other operating expenses on account. And on account is the key term there, okay? So in that case, accounts payable goes up and retained earnings goes down because I'm recognizing an expense and there's no cash flow associated with that. Next, we paid 26,000 to an employee for salary. So cash goes down by 26, retained earnings goes down by 26, recognized an expense, and there is cash flow associated with it. Next, we collect 70,000 of cash from our receivables. So the money, this 96,000 that people owe us, we collect some of that. So cash goes up by 70, accounts receivable goes down by 70, and we recognize the cash flow. Next, we pay 38,000 on accounts payable. So we pay some of this 45,000 that we owe. Cash goes down by 38,000, accounts payable goes down by 38, and we have that cash outflow. Next, we paid a $10,000 cash dividend to shareholders. So cash goes down, retained earnings goes down, and that's a financing activity. So that's different than the other operating activities because this is money that goes back and forth between owners and the money that goes back and forth between lenders. Those are both financing activities. So, and then the last transaction, accrued 3,000 of salaries at the end of year one. So my salaries payable goes up, retained earnings goes down because I'm recognizing an expense and there's no cash associated with it. And I can check my math there. By the way, NC stands for net change in cash or net cash. The last one I want to talk about, and I just want to cover a couple of these, is 2-15. And 2-16 is very much like 2-15. So showing you this I think will help. I'll show you two of these. So in this case here, we're looking at what goes in and out of an account. So I can always take beginning balance plus increases minus decreases is going to equal ending balance. So if I know three of those numbers, I can always find the fourth one. So in this case here, this is pretty easy. We start with 5,000 to begin with. During the year, we earn 72.5 and we collect 70,000 in cash. So we have beginning plus an increase minus a decrease equals an ending balance of 7,500. That's what we're solving for. So that's pretty straightforward. This next one's a little bit trickier. So in this next one here, they tell us what the ending balance is. So we have $3,200 in an ending balance of accounts receivable. During the year, the company earned $60,600 of revenue on account and collected $61,200 cash from accounts receivable. And then we had an ending balance of $3,200. So I need to figure out what my beginning balance is. Well, the way I like to do this is to say, did my accounts receivable go up or down? In this case, the decrease, the amount I collect, is greater than the increase, the amount that I bill customers. So I went down. So I can figure out that 60,600 minus 61,200, my accounts receivable went down $600 during that period. So if I ended at 3,200, I must have started 600 higher than that. So my beginning balance must have been 3,800. I can also use algebra to figure that out. I could say A plus B minus C equals D, and I could solve for A. That's another way to do it, get A by itself. But in this case, I can say, well, I can see that it went down by 600. I ended at 3,200, must have started at 38. That's always a good idea to double check your math. Oops. So I can take 3,800 plus 60,600 minus 61,200, and I get 3,200. So I can double check that. So that same pattern exists for all of the four examples in 2-15 and the four in 2-16. 2-16 just deals with accounts payable. So increases are purchases and decreases are payments to suppliers. So, but I think that'll help you see your way through. Please don't forget to email me if you have any questions.